Hi, everyone. We want to thank Rutgers and the Symposium sponsors for having us. My name is Malini Moraghan. I'm the managing director of Torana Group, and we manage a fund that makes private equity investments into middle market essential industry companies with the goal of creating a minimum of 30% employee ownership or more through many credible structures. We believe that when companies have meaningful levels of employee ownership, they're more stable and they outperform their peers. And I'm excited to be with you today and talk with Tyler and Chris, who will move to introductions next. Tyler, would you like to start us off on introductions?
Yeah, happy to. I'm Tyler Coates. I'm the CEO of Falcon Critical Care Transport. I've been CEO of Falcon for the last 9 years, and I came into that role through a somewhat unconventional path. But I went to the Naval Academy for college, and then was a submarine officer for just over 5 years. Did 6 deployments out in the Pacific before heading back to Stanford for business school. And while at Stanford, I came across this concept called a search fund, and but essentially raised some capital from a group of investors, and was focused on businesses in the healthcare space, but ended up ultimately acquiring Falcon through the search fund model back in 2017, and have been operating as CEO since then. Chris?
Yeah, well, I'm Chris Cucci. I'm the Executive Vice President and Chief Strategy Officer with Climate First Bank. Climate First Bank is an FDIC-insured full-service commercial bank based in Florida, but doing business all over the U.S. today. We're about 4 years old. We started the bank in June 2021, and we have a mission to use finance as a force for good. And what I mean by that is that we take the deposits that we bring in from customers and the capital that we've raised, and we redeploy it into loans that have a positive impact on people and planet across America. One of the key tenets to that is focusing on worker advocacy. And so because of that, employee ownership is a significant part of our business, and one of our goals is to scale employee ownership across America.
Well, thanks, Tyler and Chris, for being here. We're excited to dig into a transaction that all three of us got to work on together over this summer. Our fund was one of the lead investors to help acquire Falcon with Oberon Health, a healthcare cooperative that has a portfolio of companies. And the sale was done through a stock purchase where we exited the search fund investors that Tyler mentioned. One of the most important partners here, of course, who was there even before we were, was Climate First. Over half the purchase price came from the senior loan from Climate First Bank. And CFB brought in a level of leverage that really enabled us to put our equity to work and not only accommodate our return targets, but also accommodate the important part of our model around employee ownership and structuring a very meaningful portion of employee ownership. Our fund was interested in this transaction because we are largely set up to induce employee ownership in companies. And we target EBITDA positive companies where the frontline workforce is undervalued, but also drives a large amount of the enterprise value in a company. So certainly it's part of our model and integrated. Chris and Tyler, can you share a little bit more about what attracted you to this opportunity and employee ownership?
Yeah. And I mean, I can share a little bit about Falcon as well, and then jump into that. So Falcon is a ambulance provider for Northern California. We have about just over 300 employees, consisting of EMTs, nurses, dispatchers, and a number of other support folks. We operate 24/7, partnering with hospitals across Northern California, providing critical care transport and basic life support services. And yeah, so I think what really attracted me is, I mean, I think one would be employee alignment. I think it's I think it's one thing to talk about kind of employees being owners, but I think having them literally be owners in the business was really exciting to me, and kind of the feeling and sense of ownership that comes with that. And and I think there's a lot of other benefits. I mean, we are a people first business. It's a and having the ability to attract talent and retain talent is also really important for our success. And I think being the first ambulance company kind of enabling employee ownership in at least in Northern California is very exciting for me.
Yeah, and Tyler, I would say agree with a lot of that, and a lot of that ties into the bank's philosophy on the value of employee ownership. So clearly, it's as I said, one of our missions is to expand employee ownership across America, and certainly a key reason that we do this is because we see value in enriching workers and repaying the workers who have helped to build successful companies, especially in the middle market. But beyond that, we're a bank, and we want to invest in companies that we believe are going to be successful. And what we have observed, both at this bank, which is relatively young, and then historically, some of us coming from a background of employee ownership finance, is that these companies that convert into ESOP or EOTs, they perform really well. Customer service increases. There is an alignment. The workers now are fully aligned with the broader goals of the company because those goals directly impact them financially. And it just brings people together in a way that increases retention, and then also makes you a more attractive employer. You're able to acquire the best talent in your industry. One of our favorite things is when we have the opportunity to support a company in being the first in its industry, either nationally or in a market that converts to employee ownership, because we know that we're going to see long-term success. And to Malini's point about leverage, that's what gets us comfortable with pushing the leverage a little bit more. If this were a traditional leveraged buyout transaction, I don't necessarily know that we would have issued the same level of debt that we were comfortable with. But knowing that this was going to be long-term an employee ownership model, it got us more comfortable with that opportunity and with the ability to push leverage a little bit.
Yeah, and if I could piggyback on that a little bit, I think I mean we talk to employees all the time about they're really out there operating independently. We don't operate in a model where you have kind of management oversight on a kind of hour by hour, let alone kind of day-to-day basis. And so I mean there's a kind of high degree of relying on your employees to do the right thing, and that drives a lot of kind of our P&L as well. We operate in a business model that has not a lot of operating leverage, and so if your employees are kind of doing their jobs well and operating efficiently, it can drive a lot of success. And certainly, I mean, I think we similar to the military. For me, one of the things that drew me to this industry is it's a service-driven industry and mission-driven industry. But I think certainly the employee ownership aspect adds another kind of level of alignment that I think really is exciting for me, and I think ties into the stuff you're talking about, Chris.
Yeah, certainly. From our side, I know when internally we used to say you literally cannot book revenue unless you have qualified folks on the ambulance truck. There could be no better alignment, as you mentioned, Tyler, between employee ownership and this kind of business. One of the things that's worth mentioning from our side too is just the transition from search to employee ownership was really interesting for us. I think the strength of the CEO that Falcon had in you, Tyler, certainly supported the transition and the work that was done along the way and the continuity that brought, and just the advocacy for employee ownership that came from you was really important to have that sponsor. It wasn't as if we swooped in and were introducing this idea. I think there was an important culture that was already built up and one that really speaks to being able to derive the value, I think, in going forward. And I know the ownership portion is going to come and get formalized shortly. So one of the things, if we dig into the deal a little bit, one of the things that our fund actually does is here in this case, we came in and took out the equity And we are now working through the right employee ownership structure that best fits the business and creates the best position for the company to stay competitive and provide meaningful, tangible benefits to the employees in a way that makes sense for the employees and the company. We went through an assessment of different structures, ESOPs, phantom stocks, and EOTs, and are landing on an EOT structure. But I think what's different and unique here is that the EO vehicle was not structured during the transaction. It's being structured afterwards. And our plan is, we've reserved shares for issuance. And so the way the capital stack looks right now, our fund has a 51% stake. The other owner, Moraghan Health, has a 14% stake, and 35% was reserved for employees and executive comp. And over time, we hope to exit to the employee ownership vehicle or to an employee-owned owner in order to maintain at a minimum, but also expand the employee ownership of Falcon in the future. That's a little bit about the acquisition structure. I think as we're fresh out of this transaction, Chris and Tyler, was there anything around the pre and post ownership structure in this transition that you want to highlight or touch upon?
I can share just from our standpoint. This was, as you mentioned, there was a little bit, I would say, a unique path here with the search firm, being there past the original ownership, and that was a little bit different for us. We generally are dealing. I'm almost always it's either a first generation or a second generation owner. Usually, those second generation owners it's usually family. So it's a offspring, a child who's adult child who's taken over the business that mom or dad founded. In some cases, it's more of a internal succession, and then it's converting into employee ownership from that point. This one was really interesting to us, though, and I think I give a lot of credit to Tyler and his group because they did come in and really create value for the organization over the years that they had been there. That was 4 or 5 years. I can't remember. Maybe it was longer. Deals kind of fade away quickly. So we're looking at a lot of new ones. But over that period of time when they had acquired from the original owner, a lot of value, a lot of efficiencies built into the organization already, and revenue growth had been strong. And so we saw that as an opportunity where things had kind of been, not necessarily, I wouldn't say cleaned up, but things had been built upon from the prior ownership to where they were today, and really got it to a point where the company could support the level of leverage that we were looking to provide, to support Torana in the deal.
Yeah. And I think I would just say, like, the important things for me operating a business are people, processes, and systems. And I mean, certainly couldn't do this without the team that we have, and we've got some great leadership, and I think we have had the opportunity to share at least with the management team about this transition to employee ownership, and I think they're really excited about that, and we're eager to get the EOT finalized and roll out the communication plan to the broader employee group.
Yeah, as we're touching on that piece, I wonder if we could roll back a little bit, Tyler, and you can talk a bit about how you were, as a CEO of a healthy company, how you were introduced to employee ownership. And I do want to just make a quick mention that, we source this deal through Moraghan Health, which is in the employee ownership space as a cooperative, and I know introduced us to you. So can you share a little bit about how you even got to know of employee ownership?
Yeah. No, I mean, it's not something that I actually came across when I was at Stanford, and so I mean, I've been learning new things ever since I got out of the Navy, but came across search funds, and then it was probably 2 or 3 years after I graduated Stanford. There was a friend of mine from Stanford introduced me to Adam Rose, who was just getting Oberon started at the time, and so I mean, he really. He was looking to kind of replicate the search fund model, but with an employee ownership aspect to it. And so we had connected and had a few conversations, and I think it was a few years after that that he had established a partnership with Kaiser, which is a large customer of ours, um, and uh, and then I think it was a couple of years ago. Then we started actually exploring the idea of maybe Falcon would be a good candidate for employee ownership, kind of given the the employee centric nature and the frontline workforce, and I think alignment of values with kind of the mission driven aspects of ambulance services, and as well as our kind of mission driven aspects of our customers and partners like Kaiser.
Yeah, I think that's a really important piece to lift up, I think, for this audience, because so often and historically the employee ownership space is sort of waited for the owner ready to sell. And Chris, maybe you can touch on this a little bit. And in this case, it speaks to the just proactive advocacy of getting out there to talk to business owners. And we have a world right now where in the middle market, there's so many financial sponsors and smaller PE funds selling to larger ones. And, the connection was made with you through a very proactive introduction to employee ownership. But Chris, I'm curious of what you've seen and in terms of lessons learned and advice and sort of offering out like how to source more transactions in this space. What you think about
Yeah,
that activity?
I think this is the more you get entrenched in this space, it's interesting that it feels like a really small world. So on the ESOP side, the people that are involved with like NCEO, that organization, typically you cross paths with each other all over the country, but you know the same faces pretty quickly once you get into that space. And in fact, yeah, I think there's been a few instances recently even where your name has come up when I've been talking with some of the ESOP advisory groups, for example, because we all kind of run into each other a lot. And this transaction was a great example of that too. So Oberon was in touch with Falcon. We got in touch with Oberon through Big Path. Big Path is a boutique IB in Asheville, North Carolina, focuses on impact companies. And they're a good friend of the bank. We're a certified B Corp at the bank, and a lot of Big Path's clients happen to be certified B Corp as well. So we end up being in that B Corp network and dealing with a lot of those companies all the time, supporting them. Through that, Big Path knew that we were building this vertical in employee ownership. We didn't start the EO vertical at the bank until 2 years in, about 2023. Honestly, just because of scale. We were so small when we started, we couldn't really facilitate transactions at the appropriate sizing. But around 23, we started our lending limits increased to a point where we could get in the game a little bit more. And since that time, we've done, I think we've done close to 100 million of employee ownership transactions at this point. So it's been a good run the last couple of years. But I think just getting out into those networks is really important. And the more that you engage with some of these groups, you start to connect the dots and realize that everybody's talking to one another. A lot of companies too were in this, what they call it, the silver wave or the gray wave or whatever, with a large population of baby boomers retiring over the next decade, many of whom are founders of companies, are operating second generation companies today, and they're looking for alternatives to the options that are out there. When you scale above that small business size and start to get into the middle and larger end of the mid-market space, you can't necessarily sell to your employees, and even if you want to, like single employees or a team of executives, because it's hard for them to get the money together, even with leverage to facilitate the transaction. SBA is out the window, of course, because these are larger transactions than what SBA could support. And so then you start looking at your options. Do you sell to the competitor you've been competing against for the last 3-4 decades and see your name go away, your legacy go away? Do you go through PE, which can work in some cases, doesn't work in every case, traditional PE, and especially I think a lot of founders are looking for a path that's going to preserve the lifestyles and the work for the team members, the people who have supported them. And that's where employee ownership can be a really viable model.
Chris, in the volume that you've been seeing, can you talk a little bit more about the role of private capital, private debt and private equity in those transactions?
Yeah, see, we see a mix. So I would say that it really depends on the makeup of the seller, and it depends on how long the seller wants to be in the business. If you have an owner who's looking to get out within 5 years or less, maybe even 7 years or less, and be out completely, it's typically going to be hard for them to achieve that if we do a what I call a vanilla deal, which would just be our bank senior debt with seller note in second. Typically, we need about a 10-year window for that to be viable. So if you have someone who, for whatever reason, life reasons or age or whatever, they want to be out sooner, that's where we need some other capital partners. So somebody coming in with private capital, private equity or mezzanine becomes a necessity when you have that shorter horizon. There's also, I think, opportunities where it just makes more sense. You have partners like Torana is a good example, I think, where it's more of a strategic partnership too, that you're coming in and providing some support around the transition to employee ownership, which obviously for us helps further our goals as a company, but it also helps for the operating company itself. That transition, it doesn't end when the company converts to employee ownership. There's a lot of work that has to be done ongoing. So having someone in the group that has that experience can be a big value add.
Yeah, that's probably a good transition to touch back to Tyler. We are just at the point of that transition now. What are you looking to see moving forward?
Yeah. I mean, I'm very new to this. I mean, and I think we still have some things to figure out. I think hopefully getting close here to the finalizing the structure, but I'm sure kind of to both of your points, there's going to be a lot evolving in terms of governance and involvement from the employee population and what that looks like over time. Yeah, I mean, I think I'm really excited to kind of get the announcement and get employees engaged and get their feedback and taking this to the next stage. So, yeah.
Yeah, I think one of the just pulling up some gold nuggets from due diligence, I think part of what was exciting here is how well Falcon, your management team engages with the workforce and this, as you described, a wide base of disparate workers at the front line, right? It's 2 to 5 guys at a time, folks at a time, in their stations or on their trucks, and you've built a really effective way of communicating with them, either through text or email and different touch points. And so part of what we saw was a really nice foundation to begin rolling out something like an employee ownership communication. Because as everyone knows, or as many people know, the education that comes after the plan is set up is a huge piece of implementation, answering a variety of questions. And Falcon had a lot of that baseline set up in being able to communicate. Yeah, Tyler, we're talking through the governance questions now, right? And figuring out what is the EOT governance that's best going to serve the company. You've got a strong HR team that's sort of got some ideas on communication, and we'll be living out that answer soon over the next few months.
100%. Yep.
So I think the best way to close out here might be to think more about lessons learned and advice for folks that might be looking at similar transactions or opportunities, private capital coming in, whether it's taking out a search fund or just acquiring middle market and with the goal of transitioning to employee ownership. Any big lessons learned or takeaways to share from this transaction?
Yeah, I mean, I would just say, I mean, it's been from my standpoint a relatively smooth transition. So, Malini, thank you, and yeah, Chris, thank you for your partnership. I think obviously we still have a good amount of work ahead of us making the transition, ensuring it's successful. But I think in terms of advice, I mean, we kind of touched on this, but I did appreciate the ease of doing the employee ownership piece post transition. I do think that just getting a deal done in and of itself is a pretty big lift, and thinking about kind of getting the employee ownership piece right, successfully communicating that and rolling that out in conjunction with the transaction, to me sounds overwhelming. But I've only been through this once, the transition side. So. Yeah, and I think I think my other experience is I think simplicity is always better, whether that's kind of any part of operating a business. But it seems like finding something that is simple and easy to execute is going to be beneficial from the employee ownership standpoint as well. And yeah, I think final piece of advice is just finding the right partners to work with on this, and happy to have crossed paths with Adam Rose many years ago, and Malini with you more recently, and Chris, and yeah, it's been great working with you all and making this happen.
Yeah, I would say from the side of the lenders, it's never too early to start talking to the lender on a transaction. So we're never going to be upset, even if if you talk to us and it's a couple of years out, that's great. These things take time. The more time we have to really understand the company that we're working with and to understand the other partners in the transaction, the better. And it goes beyond just loan terms. I mean, anyone can throw out loan terms to you. That part is really easy, but really understanding the nature of the transaction, the timeline to employee ownership, structure of the EO model that you're looking at, those things are, I think, really important, especially if you're working with a lending partner who is aligned on supporting that conversion, specifically supporting the EO model. So we love having those early stage conversations, and hopefully it leads to a smoother transaction. They're never easy. There's always a lot of work in the 11th hour. It's just inevitable, but the sooner we can start, the better.
Yeah, for sure. I'll underscore that sometimes the deal is hard enough just to get done, and in the current, uncertainty and volatility of the environment, just getting the deal done is a big win. And then it's possible. That would be my message and takeaway. It's possible to layer in the employee ownership piece afterwards. Certainly the alignment of the partners that you mentioned, and I think the other big takeaway is the importance of this space just going very proactive and very, getting out there to meet CEOs and introduce the idea and talk with owners, because that's how the ideas get out there and the opportunities get cultivated. Well, I think that may be all the time we have. Thank you very much for being here today. Thanks to Tyler and Chris for your time today. And thanks to Rutgers and the Symposium sponsors.
Thanks, Malini.